Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, July 16th, 2018. In this video, we'll take a look at some long trade ideas. This is the second video today. The first one covered some short trade ideas. As I mentioned in that video, I spent the better part of the weekend reviewing charts, literally poring over well over 1,000 charts, and came up with what's well over 100 different trade ideas, both long and short. Now, what I'm doing in this, I have to cull that list down, meaning I rifle through the charts. If something stands out, I'll flag it, make a few notes on the chart, and then write the symbol down, then move on. And I, I'll spend the rest of this week culling that down to both the best looking setups. I'll check various time frames to make sure what I'm seeing on the daily meshes with what I see on the weekly charts. And I'll also, try to look at those that are more timely. In other words, some trade setups may be forming, working their way within a bullish falling wedge, for example, but it might appear to have another thrust down. It might take maybe a few weeks to a couple months for that pattern to really ripen and get ready to break out. So that's what I talk about timely. I don't want to put a trade idea out there that sits out there for 3 months before it triggers a long entry, or jump into a trade if I think it may trade sideways for a while, if it needs more time to base. I like to get in and get out. That's what active trading is all about. So let's dive into the charts here. And if somebody in the trading room asked my opinion on the financials, and in as I went through all these stocks over the weekend, there were a few sectors that stood out. On the short side, the bearish side, it was oil and gas, medical devices. Those were two that I come to mind that I probably found more stocks in those sectors than any others. And then on the long side, actually, what looks some of the better looking sectors right now are financials. Gold stocks I like as well. A lot of those stood out, individual gold stocks, more so than the charts of GDX. Again, and this is I do these videos. This is security selection. I'm not gonna. There might be a couple ETFs in here, but most of these are individual stocks. So there's XLF, and the story on XLF. We can go back here. Look at it. There's a trend line off the early 2016 lows, very well defined, and that did terminate in a divergent high. You can see the divergence right there. I should have it drawn out on this 2-day period chart. Either way, you can see negative divergence, and that started to play out. So there's some cross currents. So there's the divergent high right here. We broke down. However, we're also setting up in this bullish falling wedge right now. Right here, we have a bullish divergence or a positive divergence with the RSI making about equal lows and the PPO making a slightly higher low. That is positive divergence because prices are making lower lows. And so there it is. But we do have a downtrend line to take out. And again, bigger picture, we're coming off an extended run with a divergent high. But I wanted to say, for at least near term, these look pretty good. And you can rifle through these components. You're going to see most of the same thing. I thought I might have had some of these charts marked up. Maybe I didn't. Berkshire Hathaway, I can show you same pattern. See, Berkshire looks ready to pop. Don't forget it's earnings season. I know some of the big financials have already reported, but make sure, long or short, whatever trades you take now or positions you have, be cognizant of when your company reports earnings because you don't want to be caught on the wrong side of an earnings induced gap. And if you do, maybe you do. Some people go into into a earnings season if it's a longer term hold. There's nothing wrong with that. Or maybe you want to hedge up. That's all up to you. So there's Berkshire. I can draw some lines here, but it needs to take this trend line out. And then it looks good. It might pop all the way up to 200, that 264ish level. A couple more. This really wasn't. I didn't want to do a video solely on the financials, but I did want to point out because especially I had that question put to me. They all look very similar with the divergence there, but it also comes on the heels of that larger, more powerful breakdown. So let's just say I'm cautiously bullish, if you will, on the sector. And it might be, I suspect a lot of these patterns may break out, but when you have a breakout on the heels of a breakdown, more powerful divergent high, sometimes those breakouts can fail or the rally may go a lot less than most expect. So there it is. You can see Citigroup. So here's the story. Most of these big banks look the same, set up with these divergent lows right here, bullish divergence, falling wedge patterns, or more importantly, watch that trend line for a break. So if you're bullish, at least very near term, I think there's probably going to be some more upside momentum in the financials. All right, let's dive into the charts of all the other ones, the ones I flagged again, as I did in the short video. These aren't, I don't want to say my favorites yet because I haven't really culled the list down completely. But let me start here with any that I might have flagged. I probably should have flagged more on the long side. I have a lot of longs. I'm just looking through that list, whichever ones I put a little check mark next to. Believe me, there's many, many names. Let's just start here with um, FBHS. I think I have a flag near that one. FBHS, not even sure what company. Oh, Fortune Brands. Yeah, this one looks good. Yeah, I did definitely flag this one. Nice divergent low. See the bullish divergence coming into the lows. We had divergence here at this low, and that did lead to a nice rally. And again, using log scale, don't underestimate the scope. That was almost a 9% better than a 9% rally, and now we have a consecutive divergent low right here. So this is also at a challenging those previous lows from back here in 2016. So there it is. You have support there, divergent low. I wish I had a little bit better downtrend line to draw. That's why I don't have one on top. I don't try to force things. I have a few reactions there. Maybe we can go off this one for now. Um, this one could certainly need to base and bottom a little bit more, but that's what it looks like. I like these divergent lows. Pretty oversold, not deeply oversold, but pretty oversold. About as oversold as the stock has gotten in the past decade. You can see that looking at the previous RSI. PPOs at a very low level, maybe wanting to make a bullish crossover. So again, just one of many. And if you want price targets, just let me know, and I will zero in. I still have to um, finalize this list, and I'll try to get some of these out there. The better looking ones I'll put out as official trade ideas. CNO Financial. This is life insurance. And there it is. So I have a support right here. You can see to the left of the chart, just to the all the way to the left, a reaction high right there. And then we see several reactions there. And so that's what's come down to hit support. I like it there. If you can buy it close to that support with a stop below, it's objective. There's no guarantee this trade will play out. But your buy signal will come. So there's two ways to buy. Buy on a pullback to support with a stop somewhat below, and or a breakout there, meaning you can take a partial position, add on a breakout, or wait until a breakout, an impulsive break above that level to take a position. Either way, many ways to skin a cat, and there's many ways to trade stocks. And I like to do both. Sometimes I'll buy those pullbacks to support. You get a better entry price, a little less probability of the trade playing out. But when you get a breakout, and I also want to say this trend line's not super well defined. We have a few reactions there, so it's worth watching. And there's my target right there, be $21. First target and second target would be up here around $23 on CNO. All right, next up would be NWL. We don't have too many here, guys. This video will be pretty short. I have a lot of long setups, but just I didn't flag that many. This one looks good here. NWL is Newell Brands. This is another consumer defensive. And this is where you want to be right now. I think it's not a bad time in the business cycle and in the market, especially these beat down consumer uh, defensive stocks. Nice dividend here. It's showing me a dividend about 3.34%. And here's the magic number. Call that 28. It says 27.96. I just put the line there. People like round numbers, so does the market. So we'll call that $28. If I can get that zeroed out, there it is. You can see it a little clearer. So you have this downtrend line right here, which has just been taken out. You also have this downtrend line, which fits a little bit better right there, very well defined. It broke out of both those trend lines, and they intersected the same point. So either way, I like that when you can see intersecting resistance levels get taken out. However, bigger picture is it has this basing type pattern right here. It needs to clear above that. So really a breakout above 28. And then I would be remiss not to put a line here. There were a couple reaction highs right there. There was also some reaction lows there. So maybe around 30, 28. And then ultimately, if it gets above this level here, these highs, there's just a big gap to backfill if it can do that. So market willing and maybe this stock willing. Sometimes stocks can go against the direction of the broad market. That's a big fat gap right there. And this one has a possibility longer term if you're willing to be patient and set stops appropriately. I can tell you right now, I can see some areas right here, a couple reaction lows there. Maybe set your stop below 24.30, somewhere around there. But wait for a breakout. You're at resistance now. Why take it, hit 27.74 when only the quarter point or so it'll have taken out that level and broken out, and that'd be an objective entry. And again, this is a potential longer term trade. I like it, the divergent low. And let's just say right now my minimum swing target, if we get that breakout, would be up to 32.53. And you get paid to wait. Remember, you're collecting that dividend, so if it takes a few months to get there, you're going to have some dividend payments as well, and that's about a 16.5% gain just on capital appreciation on NWL. All right, next up, USCR. I think that's concrete, US Concrete, yes. Got knocked down. I don't know if this is trade war related or what, but you can see big divergence setting up here. That PPO is starting to curl up, poised to make a bullish cross to confirm this positive divergence right here. There's a support zone. These two lines here are a support zone. If it can't rally here, I can tell you it's probably going to fall to this next level down here, and that's pretty steep drop from where it's at now. But if it can reverse here, I think there's at least a swing trade up to. Let me give you this level. Nope, not set alert. I want to give you a price point, potential target there. Give or take around 57.60 or so, and possibly more than that. This one may want to work its way based on that pattern. It could work its way all the way up here. Okay, so that's USCR. And let's see what else I have here. That's actually the only ones I put a check mark by, but there were a lot of others that stood out. And again, and this is one I told you I like the gold stocks. Not all of them. Some of those right now. Usually the gold stocks tend to move together, but we're seeing some disparity right now. Some charts look better than others. This is just one, again, only a setup. It has to take that downtrend line out. It's still clearly entrenched in a downtrend, but there is bullish divergence right here, and that's NGD, New Gold. There are a couple others that stood out in the gold stocks. Let me see if I can find a few here real quick. Well, here's another one, Gold Money, actually. This is Gold Money Inc. I don't believe that's a gold stock, but there it is, breakout right there. Looks like the breakout's getting sold into so far, but one to watch because we had positive divergence here, bullish long wedge. And of course, all these will depend on what gold does. So I'll save gold for another video. And again, I had so many individual longs, I just don't have many stars by them. This is one I'm watching as well, AIMT. This is a biotech company, and they have a drug out for peanut allergies, very promising drug. And it had a nice run up, and you see the divergent low there, ran up, put in a divergent high. It's corrected since, but it came down to this $27 level. That's a level I was watching. So there's a big gap right there that has now been backfilled. It was backfilled there successfully, backfilled again. It's moving up. So this one has some promise on the long side as well, but you're going to have a buy signal come on a break of this downtrend line, or you can buy it around the 27 level with a stop not too far below, and that's AIMT. We'll wrap it up here, and again, I will continue to whittle down this watch list and put the best looking setups out there as either official and or unofficial trade ideas on the site. Most of the unofficial ones will make their way into the trading room, and the official trades, as always, will be on the front page. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.